running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Hope everybody is having a great Friday here. You got Hondo here. BigBeat still at the Bitcoin conference. He will be back on Monday, but we do have a lot to talk about here today. Markets were looking like they wanted to move up. President tweeted. So again, tweet analysis, outplays technical analysis here this morning. And as we see, Q's now slated to open up down about 13 basis points. We had been flying high here overnight, broke up towards the 530 mark, but now you can see down towards the lows of the day, 519.31 right now. So looking to open up slightly down on the NASDAQ. SPY down a little bit more, about 23 basis points. And again, you can see that sharp decline as President Trump said that China is not playing nice, that they are violating the trade deal, and that tariffs are back on the table. So, it does seem like it's just give and take day. One day we get good tweets or good news about tariffs, everything seems to move up. And then we get this and things move down. So market seems to be not taking it that well. This is on the back of, we actually had some pretty good economic data come out this morning. PCE inflation, which is, the main metric that the Fed supposedly uses to gauge the state of inflation. It has inched closer to the Fed's 2% target. But as we know, the tariffs change everything. April's PCE came in at +1 month over month, +2.1 year over year. Lowest since the pandemic. Core PCE arose just 0.1%, bringing core inflation to about 2.5% year over year. Market reaction was initially positive, but uncertainty around this tariff policy threatens, any kind of upward move here this morning. Inflation is cooling, but the trade war volatility still has us at risk. And, we don't. We've been yelling at it for a while here that they need to cut. Yesterday, we do know that Powell met with President Trump behind closed doors. It was interesting to read some articles on it because it doesn't sound like either one of them wanted to be in the room, and that this pretty much only really came about because when pressed by the press, Chairman Powell said that, he never looks to get appointments with the president. It's the other way around. The president should be asking the Fed to come in for a meeting if they have questions. So pretty quickly, an invite, I guess, went out. So we had this surprise meeting between Fed Chair Powell and President Trump. Powell reiterated that policy depends on data. He's going to be non-political in his decisions. And as we know, Trump privately pushed for more rate cuts. White House said he believes Powell is making a mistake, as I do, and many on Quasar have said, so pressure on the Fed does seem to be picking up a little bit coming from the top. But the question is, does it really matter? Or is this just more rhetoric back and forth between, the president and Mr. Powell? So we will see how that plays out. Tick so far pretty neutral. Advanced decline right now is down about 800. So about 800 more stocks looking to open up in the red so far versus the green. So we'll see how that plays out. We've had a slight rise in the DXY, the dollar index, but still unable to break back above 100. Yesterday, it made a real good attempt to do so. Got as high as 150, but you can see that pullback here that we've seen. We will have Mr. Flanagan in later to talk about that a little bit more in detail. But, had the attempt for King Dollar, had about a 4-day move to the upside that looked pretty strong. But you can see so far, I will say, linear regression when it comes to the daily chart on the Dixie is holding up like a champ here. You can see rejected right at the top of that channel, moved all the way back down. Question is, do we see it start to come back and challenge the midpoint on the channel, which would really put us at risk for a lower move on the dollar? Again, we will take a look. The volatility index, or the VIX, not too much movement here. So even with all of this sort of back and forth, what we see is not a real big move one way or the other. We're sitting at 1959. So a little bit of an increase than what we saw yesterday, but we haven't broken that 20 level. And for me, the 21 levels where we start to have to worry right now. Any move above 21 would give me a little bit more trepidation on there. Gold so far struggling to stick above 3,300 still. Seems to have tired out here. Again, we'll see if daily linear regression can take over and we get a nice bounce up here from a level of about 3,250. But we are seeing not really the safe haven assets working so well here, holding up. Bitcoin down here about 105.4. Again, PCE data did have it moving up, but sort of same thing we see here. Need support to hold here in this 105 area. If we fall back below 104.5, watch out for a drop down to the 103 area. And it even opens up a drop back towards that 50 simple moving average and 100K. On-chain metrics show us some pretty good support here in this 103.5 area. So still feel like that's the play, but we're definitely seeing the sell-off. I talked about it last week. We almost always see a sell-off the week of the big Bitcoin conference, usually 4 to 6%. Right now, we're down about 5.57%. So to me, some of these things, that's what I'm looking at on a bigger level picture there. Good morning, Market Shark. How are you doing, my friend? Hope all is well. What are you thinking today? Bitcoin gonna use the support here at this 105 area, or are we headed back down? I know you're a big crypto person there yourself. I think we're at a make it or break it day, so to speak, when it comes to Bitcoin today. Need to see a move back up above 16.5 for me to feel that we're still going to challenge those all-time highs. Any drop below, like I said, that 104.2 area leaves some downside, and maybe retracement opportunity there. Have seen some winners and losers we do need to talk about in general. UiPath, nice little win here. Up about 12% here, as you can see. They beat both revenue and operating income. And here's what we want to hear, right? They raised their fiscal year guidance above consensus, looking for 345 to 350 now in Q2 guidance versus an estimate of 331. So nice move through the 200-day MA on that news, jumped up and just continuing to explode here, trading, like I said, 1450. UiPath, they talked about AI automation demand remains strong amid the digital transformation trend, and riding that AI automation wave to the top of the charts for sure this morning. Yeah, I'm with you there. Looking out for that area there, Market Shark. I think we got a little bit below us at 104.750 to keep an eye on too. We do have two spots, but got to hold that today. Definitely, I'm with you there. I am with you there. What else did I have here on my headlines? On the downside of that gap, getting hit pretty hard here this morning. So retail has really shown a story of two different entities over the past week here. And what we see, the gap here, even after they beat Q1 expectations, but their guidance has disappointed. They have flat sales outlook versus what was expected to be a slight 20 basis point growth. They also warned that the new tariffs could cost them about $100 to $150 million. So again, what we've seen is quarters look okay, but forward guidance tends to be the problems. Let's take a look at this new article on it. They're saying here, yeah, Gap. Jefferies analyst said in a research note, the apparel company behind Old Navy, Banana Republic, and its namesake brand exceeded formal consensus for Q1, but its 2% sale growth and 51-cent EPS may have fallen short of buy-side expectations. So again, while they beat the consensus, it sounds like the folks, the bulls wanted to see more before they're jumping in. Analysts expect the Gap and Old Navy to continue to perform well and gain market share, but given the magnitude of the political tariff impact, which the company estimates may total up to $300 million in added cost this year, though it has plans to offset more than half that amount. Like I said, they're looking, or they estimated, Gap said 100 to 150 million in tariff headwinds. They're sticking with their hold rating, but they did lower their price target here, Jefferies, from 29 to 26. But on the drop here, you see they're trading at about 23. So they have fallen back down. In retail, it's pretty much been the same story, right? That, previous quarter was great. A lot of people, I talked about it, how I went out and bought a monitor and a few other things before tariffs sort of kicked in. The question is, is that the case across the board? Am I one of many? And we're going to see that. It's interesting here to see if Gap gets a double bounce at this level here, right at 2270. If it does, could be an interesting entrance here on a double bottom on that short-term 10-minute chart here on the bottom right. So we will keep an eye here. Getting back to tariffs a little bit, we did see, we've seen both ways here back and forth. Federal Appeals Court halts the anti-tariff ruling. So we know yesterday first we got, or the day before yesterday at the end of the day, we got a ruling that said that the tariffs were illegal and that they needed to be halted. Now we see a federal appeal court say that they're temporarily reinstating Trump's tariffs after a lower court blocked them. White House says even if we lose, we'll find another way. And that was my big takeaway there, or I want to keep in mind, is that there are other avenues for the current administration to continue to do it. It is the way that they worded it and did it versus nations. It looks like, from what I've read, what they would need to do is they would need to put it versus industries across the board, versus, instead of it being nation dependent, and that it would have much better chance of holding up. So, that's what we're keeping an eye on. Again, I do think it's a day where tweet analysis might overweigh technical analysis for the day. So we're going to keep our head on a swivel today and make sure that we're watching. Markets have opened up here. Advanced decline dropped down to about negative 3,000 here. Advanced decline is down to start off with. Tick is down to start off with. First moves across the queue, though. Slight move back to the upside. I'm watching 516.78 here as the first level of support that we need to hold on the cues. So a hold of that would keep me pretty positive. On the open here, we do see a little bit of a retracement on Bitcoin back to 105,630. Gold 32.94, sitting pretty standard there, not a real big move. Ethereum back below 2,600 on the move. VIX right around 1950. So we're not seeing any big jumps that are catching my eye right off the bat on any of the major indices here. Tick just moved negative 574. So a little bit more of an extended selling here. And it looks like so far the small caps, again, today getting hit harder than anything else. Again, they are the most rate dependent. So the RUT, which is the Russell Small Cap 2000, is down about 70 basis points here and just hit lows of the day at 2060. Q's bounced off the lows at 518.50 here, moving back up a little bit, but not seeing much strength come in overall so far. As I said, crypto's continuing to drop back down. Bitcoin at 105,470. So first moves seem to be the downside here. Again, algos on a Friday, zero DTEs. We'll see some volatility kick in, but again, if the VIX isn't moving that much, maybe we don't see all of that huge move one way or another. Let's take a look and see. What is moving the most? Ulta Beauty, that's another one we're going to talk about here. I do have a headline on them. So big winners so far: Ulta Beauty, Regenacell, Zscaler, Life 360, Dell, Palantir back up. So we're seeing some movement there. Let's take a look at the big laggards off the morning. Summit Therapeutics. So we don't really like to talk too much about healthcare because these things move up and down tremendously. But we do see the Cooper companies down about 14% here. Echo Star down 11.7, GDS Holdings down 7.65. Galaxy Digital getting hit pretty hard. They've been getting hit pretty hard since they've joined the NASDAQ. Galaxy Digital is Mike Norgrat's company out of Canada. And again, you can see since they listed on the NASDAQ, they were an OTC stock. Here in the US, they trade on the Toronto Stock Exchange, had moved up as high as 26 before really retracing back down. I am a fan of this company overall, but I'll let this play out. I might be a buy the dip move here on a bigger move to the downside here. So bigger move to the downside could give me an opportunity on Galaxy Digital, which is GLXY. They are a crypto-based company. Mike Novogratz, again, the guy behind it. Also seeing AI get hit here today. Rigetti down about 4.1%. So that could be an opportunity again. You guys know I like to buy when we see the dips on some of these AI names. I do like to dip my toes in. That could be an interesting one here this morning for us. So I'll be keeping an eye there on Rigetti. Let's get back into, again, a little bit. Let's take a look at the Mag 7 first. Mag 7, we see NVIDIA at 138.13, down about 80 basis points here. Never made it all the way to that 150 mark that BigBeat was looking for. Got really close here at like 143. I did mention I closed out my position the night of the earnings report. So I locked in those profits right after that there. So I was happy with that on my NVDX. On a little bit of a bigger retracement, you could see me get back into it here. So we'll see here. Anything towards that 133, 135 area to me gets interesting to get back in. Apple continuing to Apple at 199. So Apple continuing to fade out here. I think it's under the most pressure out of the Mag 7 when it comes to tariffs and just, fundamental news as a general basis, right? We've seen, the AI, Sam Altman's company combining with Johnny Ive's company to build peripherals or whatever you want to call them, devices, AI devices, puts Apple at risk also. So I am more of a shorter of Apple than looking for a bounce there. Microsoft's held above the 450 level here since it broke through. So again, looking strong here when it comes to Microsoft. Was watching an interview with their CEO yesterday talking about the fact that 30 to 40% of the coding that's getting done on certain languages, especially Python, he was talking about, is being done by AI. And what he was talking about is that Microsoft still does a lot of their programming in what are now sort of older, obsolete languages. C++, I think, was the one that he really pointed out that I guess AI doesn't work all that well with, but when you got into the newer things like Python, the way that the markets are moving, that AI is really doing so much of the programming for them. So I thought that was interesting. Didn't want to talk about here more on the earnings. Where is my notes here? Here it is. So American Eagle, they missed their I didn't pull up the stock here. Hold it one second. American Eagle down about 5% here this morning. They did have an earnings miss and also came in with weak guidance. They posted a wider than expected loss, 29 cents per share. They were expected to lose about 22 cents per share as it was on EPS and missed that. Sales came in line, but the guidance was weak. Trend suggests margin pressure ahead. So this teen retailer struggling to find its foothold right now, still moving to the downside here, trying to make a nice recovery, actually, not trying to bounce back off that bottom. See what the tick's doing here. Still minus 300 on the tick. Advanced decline, though, not moving too much, down about 3,300. Dixie, like I said, 99.50 or so. VIX right at that 1962, so not much of a move there. On the plus side, Costco up about 2.32%. They did also have earnings today. Let me find their notes. Costco, there it is. And again, their quarter three sales were up 8%. They had a beat on both EPS and top line revenue. I'll give you those numbers here. They were expected to come in at about $4.23 a share. Came in at $4.28 on their EPS. Top line revenue, again, just a slight beat, about 12 basis points. However, their execs noted tariff exposure could raise costs in the coming quarters. So they didn't talk as much about the problem as others. And we do know Costco, especially with their Kirkland brands, a little bit more insulated than others. Do you see Barclays just raised Costco's target to $1,000 from $980, so below where it's trading today. We do see a lot of analysts coming in here. Costco maintain outperformed by Tesla advisor groups. Just trying to see any other notes here that matter. Talks about tariffs cures. This is interesting. So this talks a little bit about what are the differences between Costco maybe and what we just saw or talked about with American Outfitters or the Gap. And it says, as other retailers talked about increasing prices, Costco says it's full force on lowering them as analysts zero in on the impact of tariffs on retailers' costs and consumer behavior. Executives at Costco on Thursday said they would stay focused on lowering prices where possible while leaning on its Kirkland brand, as I mentioned, local sourcing and rerouted shipments. Management made the remarks as the big box membership chain reported fiscal third-year quarter reports, profits and revenue that topped the expectations. Same-store sales, though, did come in a bit light. That was the biggest takeaway that I had on the downside a little bit, is that they're going to need to open some more stores around the world if we're going to continue to see same-store sales come in about average. We're going to continue to invest in price, their CEO said. It's what we do. It's how we grow our business. And we're going to continue to try and mitigate as much of this impact on tariffs as we can for our members. The CFO also said price increases were always seen as a last resort. In pre-market trading Friday, it had gone, pre-market was down. It is now up about 2% as people digest that news. Management said that to mitigate its impact from tariffs, the company has rerouted items from countries vulnerable to those import taxes to markets outside the U.S. And this is going to be something that I think is going to be interesting to watch play out. And the reason I say that is, like I just talked about, one of the avenues that the White House has talked about as an avenue for them to continue with tariffs, even if the country by country approach that they've been using is determined to be not legal, would be to do it industry by industry. And, that would be tough for a lot of these companies that have spent a lot of time figuring out, I used to get this from spot X, and spot X is going to get a lot of tariffs, so maybe I get it from spot Y now. If it's more industry to industry, then it's going to mean that, if it's computers because of chips, they're going to go up no matter if they're made in Mexico or if they're made in China. So that is going to be interesting to see how that plays out. If you can onboard things here into the U.S., you're going to avoid that. So, and it says the executive said they've managed to lower prices for things like eggs, butter, and olive oils. I mean, it's also those three items have been at a historically high rate. So, that's like saying, using the gas example as for why inflation is down. If it was at an elevated level and it comes down to just being expensive, is that really helping anybody? I guess it's not hurting as much, so it is helping. Says many of Costco's peers have tried to convey restraint on raising prices as they wrestle with starts and stops of U.S.-led trade war. Walmart said this month they would have to raise prices, and we know that President Trump told the retailer to eat the tariffs. That didn't go over that well. So we'll see what we get here when it comes to it. See if there's anything else that catches my eye quickly. I agree with the analyst from UBS here. There's probably not a lot that can come from this print that will change the market's perception that Costco is a good place to be. I do think they are best in class when it comes to those warehouses. They do such a good job, and they've got they got a good business. No other way to put it. Bitcoin holding up that 105.8, keeping me happy. Ethereum, I would like to see get back above 26. Not willing to do it yet. Still sliding down. The rut down about 91 basis points here, 2055. So again, setting new lows of the day. Q's down about a half a percentage point, not at the lows of the day, but we keep tickling against that level. So far, about 15 minutes into our cash market trading day, we are still seeing weakness across the market. One of the ones I'll be keeping an eye on and want to know what you guys think. Airbnb, I saw with an analyst downgrade here. I think I have a note on it. And like I said, Airbnb downgraded to sell. Summer travel demand under scrutiny. I'm curious. Are you guys traveling this summer? Have you cut back your travel plans? What says you, the Quasar Markets listeners? I know personally for me, I just booked my vacation and I was surprised that it rates were pretty good. The rates at hotels, airline rates were actually better than I expected. So I do think there's some lightness out there in the market because I was a little late to try to book things over at a beach on, right after July 4th and found much more vacancies than I expected to see. And Truist Securities cut Airbnb from us from to sell from and hold, citing weaker than expected summer travel. As you can see, down slightly here in the pre-market, or it has bounced back since the cash market done. So be an interesting one to keep an eye on. I don't know that people are cutting back as much as the report sort of said from the analysts. And when we've seen with Delta and American, some of those have had some pretty good numbers in general. And we can see that overall, Delta's made a nice move up from the lows that we saw last month. But again, unable to break that 200-day simple moving average here on Delta. So still range bound so far. Mag 7, NVIDIA getting hit pretty hard here. Back now down about 1.85%. So NVIDIA back at that 136. Does it go back to that 135? It couldn't break through for a while. That's going to be the question to keep an eye on here. But overall, Mag 7 looking fairly weak so far. If we look at the sectors, this is, again, we're just seeing the broad sell-off here. You got a little bit of green here on some utilities, a little bit of green on actually a decent amount of green on consumer staples. But all the other sectors of the S&P 500 are so far opening here or are moving to the downside still. Just looking here at any of the headlines I missed. We do see a little bit more of the battle here between Mr. Musk and Mr. Altman. We know that they've had some arguments overall. And Musk came out and said that he objected to OpenAI being chosen for a major Middle East AI project. The White House reportedly had to intervene between it. Musk's XAI was left out, and Musk is stepping down from his special government advisory role. And it's got AI in general down a little bit today. As I said, Rigetti was down, Pony AI was down, a few of the AI numbers. And it says when billionaires feud, entire tech deals get shelved, and Washington takes notice. So we'll see what's coming goes on here. Like I said, these two guys do not seem to like each other anymore. They started OpenAI together, but Musk does not like what's happening there, and exerted his influence where he could. And part of that takeaway too is that they officially announced him as leave from government role. So we'll see what happens there. Doesn't have Tesla's price moving too much one way or the other here, down about 42 basis points, but compared to everything else that's dropping here amongst the Mag 7, one of the better performers so far. Tick still negative, still continuing to slide down here, so we don't have much moving us up so far. We'll see another one that had a good earnings report. Zscaler up about 7.5, so almost 8% here. After they had a strong beat and raised their full year forecast, they posted 84 cents EPS, or earnings per share, versus an estimate of 76 cents. And again, they raised their fiscal year guidance. Revenue came in higher than expected. Also, they said that they saw a strong enterprise demand for cloud security, and that cybersecurity remains a fortress for growth. And Zscaler, which again jumped to an all-time high on that news of 273, and still moving to the upside here in general, looking pretty strong so far. Very strong move by Zscaler. We'll say NetApp was on the other side of that. That's right. I'm going to show that one. Bounced back nicely here in the cash market. Was down almost, I don't know, a couple percentage points here. It was down as low as 94, 92 in the pre-market. Now back up at 98.82. And for them, they did have a beat again on current quarter results, but their forecast for quarter one EPS was light compared to what the market was expecting. And they talked about concerns over enterprise demand trends. So their outlook dragging down their market price right now a little bit, but it is bouncing back pretty nicely here. I said for me, the one I'm watching is Rigetti here. We can get a nice little pullback a little further. See if we can get towards this. So far, this little support at 12 holding up, and if we can break through that, I'm looking for like 1083 here on Rigetti. Marvell getting hit pretty hard here, also down 7.39%. This one just continues to get hit too. They're definitely looking weak too. And that's after having an earnings beat and a revenue beat. But what was there? Did you see Jeffries just cut their price target from 100 to 90? Let's see what Wells Fargo said. They went down to 95 a share. The stock trading at $59. So the analysts definitely have more faith. Cantor Fitzgerald cut it to 60. So that's right about where it's trading. So they're being more realistic. So let's see. So they said they're considering continued robust demand for its custom AI chips. Marvell indicated strong revenue guidance for second quarter. Expects revenue to be $2 billion, which would be plus or minus 5% for the second quarter. The Zacks consensus estimate pegs it at $1.98 billion with a year-over-year improvement of 55.2%. Earnings look pretty good. But they continue to get hit pretty hard here. Give me 1 second here. I just realized something. Sorry there. Needed to do something quickly here. Give me 1 second to get Mr. Flanagan loaded up and into the room. I left him in the wrong place here. Give me 1 second here. I went to the wrong studio. Give me 1 second to get him moved over. Sorry about this. Give me 1 second to do this. Okay, so hopefully that will get Mr. Flanagan over here. Like I said, I apologize. I got in the wrong spot, not him. So give us 1 second and we'll get him pulled onto this. Tick still negative, man. Advanced decline negative 3,600. So we're still slipping a little bit. Q's 516.70. Not dropping down as much right now. We are more just sitting. There he is. I see him getting ready there. I sent him to the wrong place. We'll give him a second to get set up, and we'll bring him in. The man himself, live from Florida, Mr. Flanagan. How are you doing, my friend?
Yeah, a new location here, and I'll have to get a couple of things correct, but we're here.
This was my fault. I went into the wrong studio this morning. Didn't notice that I went into BigBeat studio and not mine.
Okay.
So how
So,
we doing, man? Tariffs are back, I guess, this today, huh?
you know, I was feeling so good about this Friday breakout being right at the end of May, but I have said May, June all along. So I'm going to give it another week. I think, the news out with China wasn't good. And it just shows, if that T word crosses a screen, it's sell.
Yeah, yeah.
And
I mean, you just nailed it. It's every time we think that we've got out of the mishmash, so to speak, and we're ready to make that more direct route to the upside or downside, quite frankly, because it's been on both of them. It
yep,
just we get the reverse tweet. It's a never ending cycle right now.
that's exactly right. So, until we get some more clarity, uh, and that's in front of us, not behind us,
Yeah.
as opposed to our central banks who are
Oh, I've already
looking.
been railing on them as
I
it
saw
was.
that. Yeah, I
Yeah.
mean, until we get some trade news or geopolitical news, Russia, Ukraine, it looks like what the setup is it's all going to happen at once. The whole I got very excited when I saw the Nippon Steel news
Yep.
because I knew that the Japanese trade delegation was in transit to the United States. I do think that's going to be what we call a sneaky Pete. That's going to catch everybody over the weekend, perhaps. That would be my call. But I think that one's right there in the wings, ready to happen. Um, looking across the globe, core PCE US 2.5%. So I hate to call our central banks out, but where is the inflation that,
Yeah, what are we
because,
worried about? Yeah,
yeah, yeah,
and the point just keeps on getting brought up that, luckily for one of the few times in our past is that labor is moving up with the rate of inflation also, wages.
and how wonderful is that?
Yeah, no,
Yep.
I'm with you there, but that's, so that should also be giving them the gauge that they need, that inflation can be at 2.5 if wages are raising higher than expected also.
Whenever I start talking about the central banks today, I think of the Oliver Twist movie and where he comes up and says, "Please, sir, can I have another?"
Yeah,
And it's this feeling that our central banks are so perplexed on a concept, on a model, and they're while they do acknowledge, like, sorry people, it may get a little tougher on you. It's their irresponsibility in policies that have got us to this place. So, take it on the chin. German CPI only 2.1%. Tokyo CPI in the opposite, the highest since the pandemic. But that's a good thing because Japan is coming out of 25 years of deflation. So China slipping into deflation, Japan coming out, and the rest of the world's inflation levels are going down. I don't know if it's all interconnected. I think it's pretty clear that the path to inflation for the time being is lower. And that's based on looking at data. That's not on expectations of
right.
confusion and all the things that the central banks are mustering up to give us reasons not to cut.
Yeah, it's just frustrating at this point, and not it's funny because most of the talk has just been US based. We haven't heard a lot from around the world this week, at least it seems like.
The most important thing, you had some better economic news out of Canada. Europe has been showing some pluses. It could be that a lot of this is the front loading of the April 2nd
Right.
announcement. It's very possible. I think, right now we're in this wait and see. But it's my belief that if the policymakers get their acts together and get some sort of decisions and concrete agreements, the world is on the precipice of a very positive period of time here. You got Bank of Canada next week, June 4th. They're at 2.75%. In all likelihood, they will cut another quarter percent. And then you have the ECB on the 5th next week, and they're at 2.25% and probably nearing the end of their easing cycle, though some have talked about going below the neutral level of 2%. So, a lot in the cards up ahead of us. The best news I can say is when for trading, you've got to be incredibly nimble because
Yeah,
as we just
absolutely.
stated,
There's the volatility. I mean, you can play this.
yes,
It's. I think where we have to be still wary is, like I said, Nvidia earnings, they crushed. I left a percentage point or two on the board and got out. You know what I mean? I was
yep,
in the trade. It did what I expected. It might not have made it all the way to my full target that BigBeat had at 150, but at 142, 143. I said, okay, I am good. Let's put it on a trailing stop and let's lock in some profits. A little different than my normal trading style. Normally, I'm pretty set to my take profits and stop losses, but I've been switching a little bit more to some trailing stops in the case of these jumps.
yes, absolutely. Great strategy to use in risk management, a trailing stop. And when you get in the money on trades in this type of market, it's not a breakout one way. But in this type of market, if you take profit, move your trailing stop up, you never lose money on the trade. So, I'm very positive. I'm looking at the dollar index, roughly
Yep, let me get
around
it up on the screen for us here.
yeah, roughly around the 99.5560 level, still inching higher. And that seems to be predicated on a euro dollar that's beginning to slip. But week to week, it's Friday. You know how I love my weekly closes. Last week was 99.11 in the dollar index, and we're presently at 99.60, still below the 101.10 level, which is the key break level on the upside. I do think, you're in this sideways consolidating pattern. Um, you look at all those lows, and I mean,
Yep.
this is a move down followed by a flat line, roughly. Okay, you've had some ups, but you're equally finding it down. So the world has still not bought into any sort of dollar scenario, and that keeps the downside at risk here. Um, I think if we were to get much below last week's close, 99.11, I think it's very possible and likely that the dollar will make another new low. Keeping that level in mind, it's 50 points away. There's your stop loss, say 99.05, clearly breaks that 11, and then you begin to look for a lower dollar. But
Right.
my thesis and scenario is we are on the precipice of the turnaround right now. So I'm watching everything very carefully. I think that the earnings that have come out are all supporting a higher market move. And the key ingredient is the world is underweight US. And that's the scenario. I'm looking for change. That's why I'm following the dollar index very carefully. I'm watching the dollar yen. That's a good indicator of safe haven money. 143.97 now. I do look for a close above this 144 level to confirm to me that the safe haven aspect of dollar selling is beginning to abate.
Okay, that would make sense. Absolutely. Um, you mentioned Canada. They're coming up on deck. I'm trying to stay closer to home here a little bit right now, because as you've mentioned, these seem to be the ones that we need to get sort of settled first. I mean, let's face it, we need Canada, Mexico. We need to figure out our tariffs. We need to figure out there, sooner than later, because food, so much of perishables come from these areas that we need. So, are you watching either the loonie or the peso this week?
Oh yeah, these are our neighbors. These are our partners. It's important that the rhetoric tone down and we begin to treat them that way. We just want a fairer deal. We can't be having these lopsided imbalances when we're in a trade agreement, USMCA. So MEX dollar CAD right now 137.90. I think we're much closer to the low here. I look for like a 137, 142 type trading range to be established. Dollar Canada loves to lock itself in. I don't think that the top side is that far that open because there are some sort of benefit, positives that are beginning to turn out of Canada. Again, I don't know if that's the preloaded ahead of the April 2nd. In MEX, different story. We still have very high interest rates, but I think you've seen the low on that. So I watched the dollar MEX. That's the parking place at roughly 8.5% interest rate. And that's where people park money. If that begins to go flatline down here, which I believe it is, then I watch for the dollar to begin to trade higher. And that's going to give me further impetus because to hedge yourself in the dollar and perhaps stay away from anywhere else, you'll stay North America, then the CAD and the MEX are perfect offsets to the dollar to simply move, right? So I'm watching them carefully. I do think we're much closer to a base in the dollar versus those two currencies. So I'm watching them carefully on the closing basis for a move up, which would kind of back my theory that I think you're about to see a major turn in the marketplace in the dollar.
Awesome. Yeah, I mean, King Dollar, we need at least a little bit of a rebirth of it. I'll take Prince Dollar right now. I don't even need King Dollar. Yeah, I mean, the markets, we saw it at the beginning of the week. They want to get in. It looks like they want to get in, but there's still a trepidation. And we're seeing it from the hedge fund guys too, which you're not used to seeing. I'm seeing, when we're talking to people and we're listening to people, there seems to be a lot more, trepidation from the big boys than you normally see because they've made some mistakes lately, right? They've been weighted to the wrong side.
Definitely, and I think from that perspective, they're going to be very quick to exit dollars, especially when you get those headlines last night and yesterday on China. That's a big one. We can't see slip sliding backwards, and if we do, it's going to reinforce this whole idea. When the court ruled against the tariffs, you see the world breathed a sigh of
Right.
relief,
Absolutely.
and then back on. So that's just another point. Where are we? I mean, do we need to
Yeah, and
negotiate or?
I don't know if you have a view on that. My thing is he has a million ways to attack that, so to speak. In other words, if this one does get ruled that you can't go country by country and just say it's X amount. What has been proven in the past and what I've read is that you can go industry by industry. So and that would probably be the way that they pivot, in my opinion. But it's also interesting because what we've seen from Costco's of the world and these companies is all of this mitigation that they've put in line based upon country by country tariff. What happens to them now if it's industry based? So, the best laid plans of mice and men, right, often go astray, as someone once said. So that's where I'm also like, man, I feel bad if I was the Costco guy or just the supply chain guy right now. You got to be pulling your hair out.
Right. And, let's keep in mind that there's been a lot of research that's come out now since the April 2nd. And there's a lot of solid thesis out there that talks about recent tariffs in the past. And most companies, I think it was around 50%, absorb a lot of the price increase. So this whole.
But that's in normal times when price increase and tariffs are 10%, like we're
Yes.
talking about hopefully getting to.
Right.
At 50 and 100, they can't eat them. I mean, we had Michael Litt on that went through Walmart very carefully and showed us how they only work at 2.63% net margin. And if tariffs are more than 2.63%, they would be at a negative. So, that's not going to happen. That's where we're at a spot where with a lot of these companies, a lot of these CEOs, they're at the edge of that. I truly believe that because I'm seeing in the restaurant industry, the world that I came from, where people are raising prices again. They are. You're going to see restaurant prices are going up because they held them as long as they could. They can't hold more. Now, a Walmart can obviously hold a lot more than a independent restaurant can. Much deeper pockets and much different thing to it. But that's part of it. Is that you are right. Normally we eat those things, and especially the restaurant world, I can tell you. But what it is, and it's not what you think it is. It's not necessarily the price of chicken going up, because that will vary and everything else. It's what's that chicken served on, the plastic plate, the styrofoam container, the little this that goes with it. That's where the things hit you the hardest in a lot of different industries, because
Yeah.
those things we don't make in the U.S.
That's right. Yeah, that's very true. And so, this is that word uncertainty that seems
Yeah.
to be ahead of us. And I would admit on a Friday here, there is good reason to be pausing and saying, okay, where is China in the U.S.? Does it require President Xi and President Trump to pick the phone up and to have it out and talk to each other? I think we're beginning to get to the point where the markets are starting to say, okay, show us what's going on.
Yeah, I think that's where we're at. I think you just nailed it. I think that's a great
Mhm.
way to put it. I think that that's what's capping some of this upside and everything is that, at the first side of any kind of new news cycle, people are like, here we go again.
Yep.
Is they want it. Like, show me something. Get the budget passed, get the tariffs in line, get one of these, Ukraine issues, Middle East issues moving. Because what it is like you said, and I'm going to be the contrarian again because I usually am on the show. I'd be looking for good news this weekend because everybody's expecting bad news. And what I've seen is every time that we're expecting one way or the other, it's pretty much gone the other way.
You know how we talk about this all the time, the weekend risk.
Yeah.
And for so long, the weekend risk has been negative, negative. You're absolutely right. We're setting ourselves up in the marketplace right now for a positive news drop over a weekend. And you're going to have one of these gap opens, and everybody's going to say, look at these sideways patterns that we're in. The break points are easily definable. And if you have a gap open, gap lower, it is going to be a big move. So, this is why I do believe that we're skewed to upside risk right now. It could come on a number of fronts, and it could come
Yeah.
from many of them all at once.
Right, and I'm with you. I'm with you there. Like I said, I'm one of the I'm sort of a contrarian at heart as it is, as you've seen. When everybody else is happy, I'm usually the one that's pointing out the we're not there yet. In the same way, when the sky's falling, I don't think the sky's necessarily falling.
That's right.
I just think we're range bound. On bad tweets we hit levels, on good tweets we hit levels, and those levels are starting, like you said, to provide some trading ranges.
Right. And, the currency markets yet again will become a little bit unnerved next week when we have ECB, if they cut, Canada, if they cut. The US clearly, in everybody's eyes, is holding, though I believe that the next meeting, the Fed cuts as well. But I think that if we begin to see cuts by the other central banks next week, then it's paving the way. The U.S. cannot just stand it alone here while inflation is dropping and global interest rates are dropping. The Fed has a leadership role, not only in the United States, they can hide behind their dual mandates, but this has been a coordinated world
Right.
since the 90s.
Yep.
So, the
And
Fed
that's the
has to.
problem that we risk, right? That is one of the problems right now is the disparity in rates, and not just the way that we normally see them, where Mexico has always historically had higher rates than the U.S. or Canada. We're seeing a disparity between countries that normally have similar rates.
That's right. And you've got, Christine Lagarde saying that the euro's time is now because it's strengthening versus the dollar. That's high hopes from a
Yeah, with nothing
Christine
to
Lagarde.
back it up. There is,
Nothing to
yeah,
back
there's
it.
where there's no data. The data to back it up is looking at a chart. What isn't there that's telling you is there's still no growth in Europe, and
That's
they
right.
don't have any AI or tech really to speak of, and
And
they're
you've
sort of
got
stuck
and you've got 21 member states all disagreeing on different things.
on
So
anything.
how do they get anything done? Bureaucracy is all around it.
Absolutely. Well, Mr. Flanagan, I want you to enjoy your new home and you have an amazing weekend. I hope the weather is very sunny down there. Don't get too tan on me. I'll be all jealous. Thank you so much for joining us like always. Quasar Markets, we'll see you again on Monday. As Mr. Flanagan's been saying, I'm going to give him the final word, but let's be nimble out there, everybody.
Yeah, Jack, be nimble, Jack, be quick. Don't get caught on the candlestick in these type of markets. So have a great weekend, everybody. See you Monday.
Thank you so much, Steve.